Hello, everyone. So today we are going to discuss one of the most critical updates, which is going to shape our financial landscape. That's the Banking Laws Amendment Bill 2024. So if you see in today's world, the banking sector plays a very important role in driving the nation's economy. So if banking sector fails, the entire system collapses. So that much is the significance of this sector. So when we look at this bill, which is recently passed by the Lok Sabha, it introduces significant changes which basically aim to improve the governance, customer convenience, and also overall efficiency in the banking sector. So what's changing? We'll try to understand the changes and everything in this video. Okay, so let's start with the core of the amendment. So the bill actually introduces 19 amendments across five major banking laws, which include RBI Act of 1934, Banking Regulation Act of 1949, State Bank of India Act of 1955, Banking Companies Act of 1970, and Banking Companies Act of 1980. So these changes also extend to multi-state cooperative banks and which provide banking services to millions of Indians, especially in the rural areas. So the finance minister, Nirmala Sitharaman, emphasized that these changes will enhance governance, will improve the regulatory compliance, and make banking services more customer friendly. Let's look at something related to nominee appointments. Okay. See, one of the most notable change involved the nominee appointments. Previously, account holders could nominate only one individual for their accounts or lockers. Now, the amendment allows up to four nominees. And this flexibility ensures that in cases like COVID-19, which you see, right, there are multiple family members passed away, the financial asset can still be distributed effectively even in that situation. So you can choose between successive nomination, where asset pass to nominees in a specified order, or simultaneous nomination, where each nominee gets a pre-specified percentage of the asset. That's the change which is coming in this. Now, the bill also update the definition of substantial interest in banks. See, earlier a person holding shares worth 5 lakh in a bank was deemed to have substantial interest. That the threshold which was set in 1968. And today, if you look at that amount, it is no longer significant. So the new limit is 2 crore, which is aligning with the modern economic realities. So this basically ensures that substantial interest is accurately accessed in today's financial ecosystem. We'll also talk about something related to cooperative banks. See, for cooperative banks, the bill introduced changes to the tenure of directors, which has increased from 8 years to 10 years. Additionally, directors of central cooperative banks can now serve, on state cooperative bank boards, which is again fostering better integration. So these changes basically aim to enhance governance and accountability in cooperative banks, which serves as crucial, in the rural and semi-urban areas. Okay, so the bill also simplifies the calculation of the cash reserve ratio. So banks are required to keep certain percentage of their deposits as reserves with RBI. Earlier, these calculations were done fortnightly, causing confusion and inefficiencies. But now, CRR will be calculated twice a month from 1st to 15th and then from 16th to 30th or 31st. So this change will again reduce that complexity and will improve clarity for the banks with respect to CRR. See, when it comes to household savings, there is a shift in preferences now. A decade ago, if you see, 55% of household savings went into bank deposits like fixed deposits and savings account. But today, this figure has dropped to 40%. So people are increasingly investing in mutual funds and stock markets. So the amendment reflects this shift by making banks more competitive and attractive to customers, at the same time acknowledging the broader, diversification of household investments also. So the finance minister also highlighted for how far India's banking sector has come since 2014 in the last decade. So public sector banks, once heavily reliant on government bailouts, are now self-sufficient, raising capital through bonds. Non-performing asset, the NPAs, has been reduced significantly, and the number of branches of scheduled commercial banks have increased from 3,790 to 16,550, which is more than four times. Additionally, women empowerment has been seen a significant boost. And if you look at Mudra loans, 68% of Mudra loans went to women. And the Swanidhi loan also around 44% is availed by women. So that shows the women empowerment part also and the contribution of bank and loans. Now, coming to financial inclusion. See, we know that about Jan Dhan Yojana, zero balance account, and everything. So, the government initiatives like Jan Dhan Yojana have transformed the banking for millions of Indians, and over 65 crore accounts has been opened, and even accounts with zero balance have no penalty over there. So, this shift actually ensures, that the unbanked population also gain access to banking services, which is again fostering greater financial inclusion. So, if you look at this Banking Laws Amendment Bill 2024 is a forward-thinking step towards strengthening India's financial sector, and by addressing modern challenges like improving the governance and fostering financial inclusion, it ensures that our banking system remain resilient and customer focused. So guys, what are your thoughts on these changes? Let me know in the comments. That's about this session. Thank you so much for watching. In case if you are looking for a mentorship program for civil services, if you are looking for courses, I've given the link, and the details are shared in the description. Please go through that and consider joining that. So that's about this session. Thank you so much.